Hello everybody, it is Tortoise Investing coming at you today with 5 more dividend stocks you can buy and hold forever. Reit edition, we're going to be taking a look at 5 REITs. Now before I jump into that, please, if you are new, hit that subscribe button. If you're new or returning, make sure to hit that like button and comment down below. All these things help a ton. It makes the YouTube algorithm happy, and I really want to grow this channel into something awesome. And just quick little add-in, let me know what yins want to see. Do yins like the buy and hold forever videos? Are you liking the randomizer picking a stock for me series? Let me know down below. I can keep doing it. I can do other things. I can allocate that money somewhere else. I want to grow this channel and just run with it. I want to hit 1,000 subs. I want to hit 10,000. I want to hit 100,000 eventually. I think to have a YouTube plaque would be just a dream come true, as silly as it sounds. But that is the end goal. I want to get there one day. Got to take it a day at a time, just like our investments. So, without further ado, let's go ahead and see what we're going to be taking a look at. We got Extra Space Storage, Prologus, Crown Castle, Agree Realty Corporation, and Vici. I like all of these. As always, do your own research before investing into anything. I am not a financial advisor. I'm just showing you what I think's pretty good out there. So without further ado, let's go ahead and take a look at it. This has Extra Space Storage has an adjusted free cash flow yield of 6.44%, has a dividend yield of 2.85%. Payout ratio, we don't look at that. We look at the FFO. Now the revenue. Revenue has been increasing at a rate of 16.74% over the last 10 years. The free cash flow has been increasing at a rate of 19% over the last 10 years. Amazing. And the dividend. The dividend's been increasing over 10% in the last 10 years. They had this. They did a merger, so they had to pay a bonus dividend, and that's where this is coming from. And it's kind of throwing the chart off a little bit. But trust me, its dividend's been increasing at a rate over 10% over the last 10 years. I personally own this. I'm looking to actually get more because it's down a little bit from when I got into it. Now the FFO recently came in at 202. It missed the consensus estimate of 205, but if you look here, year-over-year basis, core FFO per share improved marginally, and revenue increased 13.4%, so they are making money. And like I said, they just had that big merger, so I love Extra Space Storage going forward. Next up is a popular one in Prologus. Just a free cash flow yield of 3.97%, a dividend yield of 2.81%. Now, if we take a look at the revenue here, revenue has been increasing at a rate of 11.5% over the last 10 years. Very nice. And the free cash flow has been increased at a rate of 26.8%. Amazing. And the dividend, 12% over the last 10 years. Super, super good compounding right there. Now, let's go ahead and take a look here at the FFO. The FFO came in at $1.83, beating the consensus average of $1.68, comparable to last year's $1.11. So they are growing. I really like this one as well. Before I dive too much more deeper into this, let's take a look. This is a dividend reinvestment calculator. It's like a drip calculator. So let's take a look at Extra Space Storage real quick. Since 2013, so over the last 10 years, had an annual return of 17.28%. The market, 13.4%. And we're going to go ahead and take a look at PLD, which is Prologus. And it has had an annual return of 15.3% over the last 10 years. So very nice. I just thought this would be a nice little thing to have pulled up too as I'm going through everything. So next up, Crown Castle. Crown Castle is down pretty heavily. I like it, though. Adjusted free cash flow yield of 3.52%, dividend yield of 5.75%, super high yield. Revenue's been increased at a rate of 11.13% over the last 10 years. The free cash flow has been increased at a rate of 16.82%, so very nice there. That dividend's being compounded at a rate of 8.31%, so not too shabby there as well. Their last FFO report, let me refresh it here. If it will load. There we go. Sweet. Came in at 205, which beat the consensus average of $1.99 and surpassed last year's of $1.80. So, growing. You like to see that, especially with something as down as much as this. These other ones are down, but they're not down like Crown Castle is. If you take a look here, had recent highs over $200, now down to $108. So, might be something you want to look into. Greed Realty has adjusted free cash flow yield of 6.67% and dividend yield of 4.44%. This is just super up and to the right here. Revenue's been increasing at a rate of 29% over the last 10 years. The free cash flow at 32.8%, very nice, and the dividend yield. This is a monthly payer now. They used to not be. It's the reason this looks all wonky and all over the place. But they've been increasing their dividend at a rate of about 6% a year, and I like them. If you like that gratitude of like the satisfaction of having a monthly dividend, this might be something you want to look into. The other one would be Realty Income, the monthly dividend company. But Agree Realty, let's go ahead and hit the refresh button. Probably need to hit refresh on all of these. Nope, that one's loading. It's just wanting to be mean to me. All right, FFO came in at 98 cents. It is right in line with consensus estimates. So not too much growth going on there, but they did deliver a surprise of 2.08% as it was estimated to be a quarter ago was 76 cents. Now it's 78 cents. So it is slowly growing. Again, when it comes to these, you want to look at the FFO, which is funds from operations, and do research before investing into REITs because they're taxed differently. But lastly, we got Vici. I like Vici. Vici 6.36% on the adjusted free cash flow yield. Dividend yield of 4.96%. Very nice. Revenue is just up and to the right. This is a newer company over the last couple of years, and they have been just ticking in the right direction with almost everything. I love Vici. This company has such a good future ahead of it. Its FFO came in at 54 per share. Its estimate was 53, and it compares to last year's 48. So again, just such a good grower. I love Vici. I am long Vici, and I'm waiting for that to dip back down into the 30s, and I'll jump into it. Now, if the reinvestment calculator, let's go ahead and take a look here at Crown Castle. This says 6.91, but what you're buying into is the downtrend here. This thing has dropped like a rock. At one point, it was getting real close to passing up the S&P 500, and then it kind of, like I said, it's dropped off. It's down like $100 from its highs. And next up on the drip calculator is ADC. ADC has been beating the S&P barely at 13.55%. But again, monthly payer, and a lot of REITs are struggling right now. This was consistently beating the S&P 500 for a while. But like I said, with the rates and stuff going up from the feds, this is having a big impact on real estate, and it's having a big impact on a lot of REITs out there. And lastly, with the reinvestment calculator, Vici came out in 2018, and if you look here, it's been an annual return of 14.13%. So very nice. I like them. I like all of these, to be honest, but if I had to just buy one more, it would be Vici. I'm just waiting for this thing to hit back down there into the 30s, and I actually have money to take advantage of it. Because right now, I'm not sitting on any cash right now. I do need to fix that in case anything goes on sale or if something crazy goes to market. It might be the next thing I try to do is build up about a 10% just cash cushion that I have sitting on the sidelines. Might keep it in my savings or something. But yeah, guys, that's everything I have for you today. Hope you enjoy. Make sure to hit that like and subscribe button for more. And until next time, see yous.